it's logical to lock in now.
Yeah.
But don't lock yourself in longer than you need to be, because you should go back to variable. So I have 5 residential properties. So I have 8 residential properties at RBC. I have 5 residential properties at CIBC. And then I have another maybe like 10 with Libro. And that's like max that I can do for residential properties, residential rates. After that, they kind of like, nope, you're done, right?
So it's 23 properties. It's but even that's interesting.
And you did one too. You just bought a house.
I actually just transitioned last minute to do a fixed instead of the variable.
Yeah.
Yeah.
So I rolled into a fixed,
which is interesting because you're always like pro variable.
Yeah. Well, I'll tell you. Okay. So this is what we can talk about.
Okay.
All right. What did you get on your fixed?
So I ended up doing a 5.2%.
Interesting.
Yeah.
Interesting.
Because the variable, so I originally was going to go variable because my logic was I was looking at the 5-year fixed rates and I was looking at the variable rates and I'm like, well, over the course of a 5-year period, there's no way that the average of the variable rate is going to be higher than what the fixed rate is. I don't want to be locked in at a fixed for a certain period of time. So I'm going to go variable. Over the period of time, as the property got closer and closer to closing, we had several more rate hikes during my period of like when it was going to close. And so then as I was thinking about it, I'm like, you know what? I'm going to go into a shorter term, either like a 2 or 3 year term rather than like a 5-year term. And I'll lock in at 5.2% rather than going variable where it might continue going up to 7%, 8%. Like who knows? But at the end of the day, we're likely going to see a couple more rate hikes.
Yeah. What was the variable quote?
The variable was going to be at, what's prime right now?
No clue. They give you a prime plus?
No, I think it was prime minus 0.25 or minus 0.5. Like it wasn't
before this hike,
or might be. I don't even know what prime. Essentially, it would have been after this rate hike. I would have been at 5.4%
variable.
Variable because it was at 4.9% prior to the rate hike yesterday.
Yeah, so the spread for this doesn't justify going variable anymore. So when I say go variable, what I mean is like over the course of long term, it makes sense to be variable. But if literally the Bank of Canada is telling you, or the feds are telling you that there's more rate hikes coming, well then it's logical to lock in now.
Yeah.
But don't lock yourself in longer than you need to be, because you should go back to variable. That's my...
So I did a 2-year. I figured I'm like...
I just did a 2-year.
Okay,
I did
5.4.
So CIBC, their most aggressive rate was 5.4, which is shit compared to what you just got, apparently.
So, but I did it literally the day before the rate hike.
Yeah, so did I.
Oh, yeah, okay.
Yeah. So, yeah. No, that's commercial rates.
Okay, that makes more sense. I'm like, there's no way that I have an available rate lower than yours.
Yeah, commercial rate. Yeah, never mind. That's
commercial rate.
I don't have
5.4.
Yeah, I don't have. I don't have residential rates at CIBC. That's right. I don't.
Yeah, this is my third. This is my third residential mortgage, and they're all with RBC. But yeah, there's no way that I'm getting access to a lower rate than your private banking rate.
I'm not private banking at CIBC.
Oh.
Yeah, so I just ended up swapping banks in the beginning because these guys had better rates, and I have private banking at RBC. Yeah, CIBC tried to get me in private banking, but our RBC is just they were easier to transition into private banking.
Maybe explain. I think one thing that people would be really curious about, because it's something that I learned from you, why in majority of time in history and probably even in the future, like what you would be looking for to switch back to a variable rate. Like what would the spread be essentially where you're like, okay, yeah, I'm going to switch back to variables, let's say in hypothetically 2 years time. Like what's that criteria? What's that specific criteria that you're looking at? Because I think people would find that interesting.
Me personally?
Yes.
Somewhere between 20 and 25%. Yeah, lower. So if you told me like you're 50 basis points on a 4.99 rate, or that's what it was, right?
4.9.
4.9. That's like 10%. It's just not enough of a spread. You might as well just lock the fuck in.
Exactly.
So for me, I would say if it was 4.25 or like 4.2 to 5.2, then that would start convincing me to still stay variable, which
Right.
it was. It was around that. It was even more.
It was.
Right? It was even more of a spread. But typically what ends up happening, as rates start to increase, you usually see the spread close, right? When rates go down, the spread tends to be a little bit bigger, but it's just the nature of larger numbers, right? So it just kind of is what it is.
Yeah, 50 basis points on 2% and 50 basis points on 5%.
Yeah.
It's completely different.
100%, and it makes a big difference. So as that spread closes, it makes more sense to lock into a fixed. Only for a period of time where you think that the rates will still continue to rise.
Yes. Yeah.
Only then should you stay into a fixed. Any other time, even when the market is doing nothing and it's stagnant, you still want to be into a variable, because you can always, once you get a rate hike and there's a certain narrative in the market that's telling everybody, hey, listen, like, expect more of this, or chances are there will be more of this. It doesn't happen overnight.
Right.
So what? They all of a sudden, like, tune into the announcements, though. Like, when the Bank of Canada is announcing, like, hey, we're going to have an announcement in a week's time, and the consensus is that rates are going up, well, might be time to call the fucking bank and make a decision, right? But what you also have to look out for is try to catch that before they actually truly do make the announcement, because what banks usually do is they start to pad their rates prior to the actual rate hike.
Totally makes sense.
Yeah, so you want to really kind of get in the you want to hear it, like, you want to put your ear to the ground a little bit, right? Talk to maybe like your bankers, and they'll hear whispers before it actually gets out there. You want to kind of do that, because I have seen that where banks will start padding shit, and then you got to kind of fight with them and stuff like that. So,
you did 2-year fixed rates.
I did a 2-year fixed, because I'm going off of what those U.S. lenders told me. That in around 2025 we might see a change. I was actually thinking that we're going to start seeing changes like in 2023,
right?
But doesn't look like it.
Yeah.
I might be a year late for getting back into a variable in some cases, but I'm okay with that. It's not gonna. You won't see, say, for example, over the course of a year, you're not going to see like a drop back to like 2%. You might see like a drop of like 50 to 100 basis points. So it's really not that big of a deal. But in the end, I extended it out 2 years. So I have a lot of stuff that's actually renewing in the spring of 2023. I have a lot of stuff that's renewing in a year from now. And then I have a lot of stuff that's renewing in 2 years from now. So I'm kind of like, I'm all over the place right now, which is okay with me.